Hi, everyone. We are going to get started here in about a minute. All right, folks are coming in. We'll go ahead and get started with introductions. Good afternoon, well, good morning still, everyone, and welcome to our webinar today. My name is Mary Verano, and I am the marketing coordinator at Corrigan Krause. Thank you for taking the time to join us today to talk about non-traditional fundraising. Our goal for today is that you will walk away with a deeper understanding of the sometimes newer, sometimes less traditional ways a nonprofit can fundraise. Before we get started, I want to go over a few housekeeping items. Please use the chat feature to send in your questions or the Q&A feature. We want this to be an interactive discussion. So if you have any questions during the presentation, go ahead and put them in the chat or the Q&A, and I will ask our experts. We are recording this presentation. So after the presentation, you will get a follow-up email with the recording and the PowerPoint. And please don't forget to sign up for our newsletter by emailing info@corrigankrause.com. We can add you to our general interest newsletter and the nonprofit specific newsletter. And you'll get about 2 emails a month. All right. Normally, this is where I would say I am moderating the discussion today. But today that is not the case. Kaitlin Dorsch, Senior Manager and the leader of the nonprofit group at Corrigan Krause, will be guiding our discussion. So Kaitlin, can you introduce yourself?
Absolutely, thanks Mary. As you said, my name is Kaitlin Dorsch. I am a Senior Manager here and the nonprofit leader, working with a bunch of great coworkers. And here at Corrigan Krause, so we have a core group of nonprofit specialists. We offer support in terms of bookkeeping, consulting, tax, and financial support. So we kind of cover the whole gamut of services there. And so our goal is really long-term proactive relationships and teaching you to operate your nonprofit like a business and really focusing on education and consulting. So yeah, happy to be here.
Great, thank you, Kaitlin. Joining Kaitlin today are 3 incredible panelists: Lauren Steiner from Grants Plus, and Emery and Gwyn Broski of Corrigan Krause. Lauren, would you please introduce yourself?
Sure. Hi, Mary. Thank you so much for having me. And thanks to Corrigan Krause for putting this together. I'm Lauren Steiner. I'm the founder and president of Grants Plus. We are a grant writing and consulting firm. We're based in Northeast Ohio. We have more than 20 grant writers, and we help our organizations, nonprofit organizations, do great grant seeking. And that is both looking for the opportunities and identifying them and then pursuing grant funding.
Great. Thank you, Lauren. Okay, Anne.
Hi, yes, my name is Ann Emery. I am a senior tax manager, and I focus on our nonprofit clients when it comes to tax compliance as well as consulting. I also do business and individual tax compliance. And I do serve on a nonprofit board, so that gives me a little bit of a different perspective and experience from that point of view. And so I kind of use all of that and try to assist our tax exempt clients, and from the ground up. Sometimes they're already formed and we're stepping in. Sometimes we're starting from ground zero and doing the application process and getting them up and running. So
Great, thank you, Anne. And Gwyn, please introduce yourself.
Thanks, Mary. Yeah, as Anne said, we have a small sort of like tax niche here at Corrigan Krause, and most of my time is focusing on helping our not-for-profit clients stay compliant with their federal and their state filings, and also assisting with bookkeeping and making those, helping them get registered and kind of compliance that pops up along the way. Along with the nonprofit niche, I also work on various individual business returns.
Great. All right. As I said, today is all about the changing landscape of fundraising in the nonprofit world. Kaitlin, take us away.
Thank you, Mary. So I'm sure a lot of you are wondering, what do we mean by non-traditional fundraising? What are we talking about? And so what we're thinking of is anything other than our typical donations, right? We know that our donors are the key to our success. And through these times with COVID and everything, we have seen some of our nonprofits thriving, where their donors have stepped up and significantly helped in these challenging times. And then we've seen other nonprofits really have to get creative and look for other sources of revenue and try to find different streams to keep their operation and their mission going. So today, when we're talking about non-traditional fundraising, we're talking about things like our grants, things like Raffles, new concepts like cryptocurrency, and then some more basics like how are you using your 990 as an advertising piece and really getting out there and putting the best information you can in there. So our world has really changed so much over this past year, and how are we leveraging our current methods of fundraising? And so what else do we need to remember too, while we're thinking of these things? So with that, we'll start with our first panelist, Lauren, and we'll discuss grants. So Lauren, this is really your area of expertise. Can you tell us a little bit, how can a nonprofit get a handle on their grant seeking? We see a lot of our organizations and they feel like they're missing out on opportunities that they don't know about. So how can they get a good handle on that?
Thanks. Yes, Kaitlin. One of the things that I encounter a lot is organizations that come to me and say like, yeah, we feel like we're missing out on grant opportunities. They're just passing us by. And so we always say, you want to have a plan for your grant seeking. And if you have no plan, I would say the best thing to do is to look at what came in last year as far as grants go and start from there, because your warmest grant prospects are your most recent grant prospects. And then you want to add new prospects to it after you've done some research to identify those that may be likely to make grants to your organization. Otherwise, one of the situations that you can get into is, whatever grant opportunity happens to just pass by your desk, all of a sudden, an organization may be going for that, and they may be going for this one and this one, and it may not be the ones that actually make the most sense for them. And so, if you have a plan and then you have some prospects, when a new opportunity comes across your desk, you can evaluate it against those that you already know you're going for, and you can make the decision whether it makes sense to go for that now. One other thing is to make sure you're allocating time and resource to it. I think sometimes I've seen executive directors who are so busy with so many things and they're doing the grants, which, may or may not be the best use of that person's time. It takes money to raise money. And so it takes resources to raise money. So there's definitely an opportunity cost to both pursuing grant opportunities and to not pursuing grant opportunities. That's why you want to do it smartly. If you're not pursuing grant opportunities, there's actually a study that comes out from our Grants Professionals Association every year. And I laugh every year because it says those organizations that go for more grants get more grants. It's like, yeah, okay, right. If you ask, you get, right? Duh. But the issue is, and this is something that I get asked a lot, what should our success rate be? Like, what should the percentage that we get? And I have sort of a rule of thumb that around 75% is a really strong rate. That tells me that you're asking appropriately, you're getting, and when I say 75%, it actually means like 75% yeses as opposed to no's. It doesn't matter. It may be less dollars, but it's like if you're getting 75% of your prospects are saying yes, then to me, you're asking the right foundations, institutions for your grants. If you're having less success than that, maybe you're just being more aggressive, but let's say you're getting like 25% or 15%. I don't know if that's the best use of your time. So yeah. And the last thing I'll say on that is just focusing on relationships. If you're getting a lot of no's, you want to build the relationships with those funders, ask them why, and then see if there's ways ways that you can improve the things that they're telling you. And that's just a way to get sort of deeper into that sort of trusted relationship with those representatives.
Thank you. That sounds like some really great advice. So it sounds like we need to identify our recent opportunities, identify some new opportunities, and then look at in-house about who our resources are and where we go and whether we're using the right people and spending the right funds, and look at it that way.
Exactly.
Great. When you talk about research, it sounds like I've heard the term funder research, and I'm not real familiar with that. Can you tell me what that is and how it works?
Yeah, so basically that's what I said, identifying of all the universe of institutions that make grants, which are those that we should be going for. And when we're looking, and we do this for clients, but you can do it on your own as well. But like you're looking for alignment. That is the key word. You're looking for where is there alignment between two things. One, what that funder says they fund. So that would be like they say they fund education. They say they fund youth development. What do they say they fund? And then what are they actually providing funding for? And for that, we look at the 990s of the funders. We look at the tax documents, which they have to outline who they provided funding to and how much. And so somewhere in there, generally, I think, is the best predictor of what a funder is going to do. It's basically what they've just done is what is the best predictor of what they're going to do. So when we're looking for potential funders for a client, we're looking for alignment between what they say they fund, what they've actually funded, and what this organization does or plans to do. That's the best. And my best tip on research, if you've never delved into it before, funder research, is look for a similarly situated organization and look to their grant funder list. Everybody does it, right? I'm not sharing anything that that people don't know, but you look at their donor list. Who are their institutional funders? Who are their grant funders? And then you have the names, and then I would look up those foundations and see if they might also be a fit for you.
Awesome. And so when we're looking at potential fits, I know there are all sorts of grant opportunities, some of them from private foundations, some of them from other organizations, and some of them being federally funded.
Right.
Do you think that nonprofits should be looking at government grants when they're thinking about, their funder research and who they're considering for grant opportunities?
I do. I feel like it's one of those things where you should look at it and make a determination. Either we are going to look at federal funding, or we're going to go for government funding, or we're not. And there are some organizations, nonprofit organizations that say, no way, we're not doing that, either because of principle or some other reason, or they're just not a good fit. But if you're doing something, if your mission is something that the government cares about, and there's some examples of that, like if you're doing a service that the government cares about, housing, workforce development, education, and if you're providing this service for a population that the federal government cares about, and that could be veterans, people who've experienced homelessness, people who've experienced sex trafficking, youth aging out of foster care. These are populations that the government cares about. If you're doing something that's kind of within that realm, I think you should look at government funding. It can be daunting. You can hire help like Grants Plus to help you. But basically, if you're doing something in those subsets of the sector, and if you have a good track record with grant funding, say from private foundations, I think you should look at government funding. You also want to make sure that you've got staff on board, that especially finance staff, and having Corrigan Krause could help you identify, if you have the capacity to take on a federal grant, because it does take a lot of reporting. And I will say this, do not even pursue federal funding unless you've already handled restricted grant funding from someone, because the government funding is going to be very restricted for very specific purposes. But if you're not looking at it, you could be leaving major dollars on the table. We have helped organizations get their first federal grant. Sometimes it's the 7 figures and above. it can be game changing for your cause. So I would say, look at it and at least make a determination. Yes, this is in our future, we think, or no, not at all. Another really great website to look at is usaspending.gov. And that's where you can do some kind of like reverse searching, and you can look at other, again, like I said, similarly situated agencies, and are they getting any government dollars, and how are they getting it? It's another way to sort of look for potential government grants.
Thank you, Lauren. Those are some really great points. And I think that's something that we see a lot too. We've seen some of our clients get their first federal grant, and it is a game changer, but the administrative compliance behind it is a big challenge. And sometimes you run into then over 750,000, you run into A133 thresholds and requiring additional audits and things like that. So some good points to think about in there.
Right.
When writing a grant application, so what makes a compelling story to our granting agencies and the audience that we're writing for? I mean, what should we be thinking about when we're putting our narratives into the grant applications?
I love this question. I teach in at Case Western. I teach an intro to fundraising course, and always love when we come to this part because it's what I do all day, every day. But one of the best tips I can provide is to write for skimmers. We are a world of skimmers now. We are not reading novels and that sort of thing, for work, right? We are skimming things for the most important points. So make your points early in your proposal. Generally lead with your most important points, lead paragraphs with your most important points. You want to really write for skimmers. Also signposts in your writing, bulleted lists like is on screen, anything that's going to help break up a dense bit of writing is really helpful. The other thing is most applications are online now, and it would really behoove you to write them out in a Word doc, gather the questions, write them out and edit them, and then upload it. What sometimes happens when I come in to a place, they may say like, oh, well, I don't have a copy of what I submitted because I did it online. And the problem with that is when a funder may call you with a question, you have no idea what they're actually looking at because it was just what you typed out that day. The other problem is there's such tight character limits now, and very narrow sort of questions that we don't even know if you even told your whole story. So you want to make sure that you control the story, that you have the ability to do that. And the last point I'll make is elevating the voices of those you serve. It has become sort of a trend that I think funders and everyone is tired of the narrative that the organization is the savior of the day. We really want to take a look at who are the people that we're serving and what is the very important role that they play in this work. So any way that you can help elevate the voices, telling the stories, doing it respectfully of the people that we serve is really, really a great way to make your proposal stand out.
Wow, that sounds like some really awesome advice. And I appreciate that. So I know a lot of applications also have a financial piece, right? We usually have to put in some sort of budget. When you do that, do you want the budget to show need? Do you want the budget to show that it could run without the grant? What kind of things should we be considering when we're trying to build a budget like this?
Yeah, the real answer is it depends, but I would say as a general guideline, the budget should demonstrate some sort of need. If you do show a margin on your program, just be sure that you explain what that margin is needed for or will be used for the organization. It could be for, say, an operating reserve or something like that, or it's critical for a program that doesn't generate enough income or something like that, but you want to be really clear about that. The other thing I'll say about budgets is you want to make sure they are fully loaded. And that would be that you have all of your overhead in there, or the appropriate percentage of your overhead, that you have, all the staff it takes to do something. One of the biggest mistakes we see organizations make is that they go for a grant for $10,000 and then they have a budget that outlines $10,000 worth of expenses. And the truth is that's actually costing you money, because it takes people and overhead, percentage of legal, a percentage of accounting, a percentage of IT, all of that stuff in order to do the work. And you do want to know, some grant funders don't like to fund salaries and things like that. You do want to know what their particulars are. And if you don't know what they are, it's a great opportunity to call them and ask them and have that conversation. What are the limitations on this? Can we include overhead in the budget? Do you have a percentage of overhead that you want us to stay under? This sort of thing. It's just a great opportunity to deepen the relationship with your funder to ask about that.
That sounds great. And so just to clarify, or my understanding, it sounds like we shouldn't be including our hard costs, but then also thinking about who's going to be working on these projects and how much time they're spending, and also what are their payroll taxes, what are their fringe benefits, and what other costs are we going to incur because of the grant. Is that correct?
That's right, fully loaded. And the thing is, I think you want to look at a grant budget as really it's a program budget or a project budget. The grant funder, you may be submitting a budget for $300,000, but asking the funder to cover 50 of it. You still want to show them the context of their dollars. So, and of course, the difficult thing about grants, and one of the reasons that we're so busy, is because every grant funder has different requirements. So even their budget forms can be very different. You do want to follow what they're asking for, but you also want to paint your organization in the best light possible with that grant budget.
Sure, absolutely. So we have some good advice here. And so how do we know when we need help? How do we know when somebody like Grants Plus could really be an asset to us and adding grants to our list each year versus just trying to do this ourselves?
Yeah, it's a good question. And I think it's really when, if you feel in some way your grant program is underperforming where it should be, if you are feeling like you're missing out, if you maybe have a grants program that's sort of on repeat, we come across that a lot. We've always been getting 5,000 from this funder. We've always been getting 10,000 from this funder. So we just ask for that every year, rather than kind of pushing if your grant program doesn't feel like it's maximized, that's when we can come in and really help, because we would look at who've been your funders in the past, who's funding you currently, what are you doing? And then we go to the universe of funders and say, okay, then who should you be getting funding from? And that's where we can usually identify if there's money on the table somewhere. If there is someone who's going to the ABC Foundation, they're getting 5,000 or 10,000 a year, and the average grant from that funder is 25 or 50, there's opportunities there. And then we can help them kind of turn the dial up on their funding. That's when we can be the most help.
Awesome. It sounds like you have we've received some great advice there. And Mary, I saw your hand up. Do you have something to add?
Yeah, actually a question for Lauren. For our groups, what's the best way or the best ways to track the previous, current, and then potential grants? Yeah. So I'm thinking, how do you get a picture of where you are to see, yes, we do need help maximizing, or I think we're doing okay? How do you keep track? How do you do it?
That is such a good question. And I wish I had a better answer, Mary. The truth is that we are looking at software packages to see if there's one that we could partner with. There are a few. There's a program called Grants Hub, which we're looking at. We've talked with them. Another one called Foundant. So anyway, I don't have a good sort of like software recommendation. I would say that most of our clients are just using Excel for this. But it's something that I think a professional, Grants Plus, we could look at what you've done, what you're doing, and your success rate, and say like, yeah, it seems like, oh, someone just mentioned Little Green Light, which, yeah, that's also a very good software package. And of course, Blackbaud, if you're using the Razor's Edge and the modules to track grants. But, we can look at, I think, a grants program and say, if we think it's underperforming, you could go to a grants professional maybe who could take a look at it and say, oh, it looks like maybe you might be missing out. Or I would be totally honest to say, wow, it looks like you guys are kind of getting all the usual suspects and you're doing it at a high level. I don't know what value we could offer. So hopefully that's helpful.
So circling back then, if to engage someone like Grants Plus, so a group could actually contact your team and just say, hey, can you give our books a look over and see where we're at to see if this makes sense? And it sounds like your team is going to be very honest with, well, looks like you're doing a great job. So
absolutely. And it would be a combination of looking at records and having a conversation, because usually what I find is somewhere in between there, I can determine, if you feel like you're missing out on grants, you might be, but if I can look at what you've been doing and, take sort of the input from the director or development director, that's when I can really get a sense like, what, I think there's some potential out here for you, or I think you're doing pretty well already.
Got it. All right. Thank you.
Mm-hmm.
All right. Thank you so much, Lauren. I really appreciate that. At this point, we'll kind of pivot over to talking about Raffles. We've seen a lot of our nonprofits jumping into different types of fundraising like this. When grants are maximized, when our donors are maximized, what else can we do? So when we're talking about Raffles, I guess, and what are we seeing our nonprofits do? What kind of things are we seeing raffled off?
Yes, I think with the raffles, what we're really seeing is a lot of mostly the cash, I'll say cash raffles. A lot of clients are just doing the cash raffles to raise funds. We're also seeing a lot of non-cash type raffles. We've had a few clients, some examples, they're raffling off an automobile. We have one even raffling off a home. A lot of sometimes nonprofits, they'll receive non-cash contributions from donors to use to raffle off to raise money. So I think the most common, yes, we're seeing the cash ones, but we also are starting to see a little bit more of these non-cash raffle prizes because of the donations that some nonprofits are receiving, and that they're able to turn that around, use that as a fundraiser to really raise funds for the organization.
It sounds like those might be some pretty big ticket items there. If you have a home and a
right.
car, so
yeah, we've seen a variety of on the spectrum of non-cash prizes. Yes.
So what should nonprofits be thinking about as far as reporting requirements? Do they have to do any reporting when they raffle off something as significant as that?
Yes, so that is one thing when an organization is going to go ahead and they're going to have these raffles, whether it be a cash prize or a non-cash prize, there is a reporting requirement, and that falls upon the organization. So 2 conditions have to be met to determine if they have to report anything. And that, number 1, is if the value of the prize less the wager amount is $600 or more, and if the value of the prize is at least 300 times the amount of wager. So those 2 conditions, the $600 or more and the prize value of 300 times the wager amount, both of those have to be met. If both are met, then the organization is required to file a Form W-2G. If only one is met and not the other, then there is no W-2G filing requirement.
Got it. So in terms of, let's say, like a 50-50 raffle, if I were to put in $5 and the prize is over 300 times the amount of that $5, that's what would trigger our reporting requirement. Is that correct?
Correct. So right.
And over 600, right?
Right. So if the prize value is over 600 and you look at what the cost to buy a ticket was, and if you take that cost times 300, and if that is more than the prize amount, then yes, then you have a reporting requirement.
Okay. And so I think probably a lot of our nonprofits are doing this and not realizing that they might be triggering some sort of reporting requirement
right.
intentionally.
Correct. And this really pertains to the raffles. And I think, again, it's because they might have that over 600, or they might think and again, it's I've seen some examples where it's the value of the prize less the wager amount. So if the value of the prize is $600, but it costs someone $2 to buy a ticket, now you're under that 600 and you don't have to do the W2G. So I think it's something organizations just make sure they're aware of. If they have any questions or they're unsure, definitely seek the advice of a tax consultant just to make sure that they are compliant with that reporting requirement.
Thank you. So once you know that you've triggered some sort of reporting requirement, is there any withholding required for these raffle winners? And who's responsible for that?
Yes, there is a withholding requirement. And again, that responsibility also falls upon the organization. So when you're looking at withholding requirements, now the threshold is if the value of the prize less the wager is over $5,000, then the organization is required to withhold 24% and remit that to the IRS. So when we have cash raffles, that's pretty simple because before the cash prize then is delivered to the winner, the organization can hold back that 24% and they will go ahead and remit that to the IRS. Where it gets a little tricky is when we have non-cash prizes. So when we come to non-cash prizes, it's still the same threshold. But instead of, it's a non-cash prize. So now you're going to use the fair market value of that non-cash prize. So what I have seen when we have larger items, like an auto, vacation type of raffle, there should be some type of appraisal or documentation that the organization has to say, here is the fair market value of this prize. Because again, the reporting requirements, whether it's just the $600 threshold or this $5,000 withholding, is all going to be based on the fair market value of that non-cash prize. So when you have that non-cash prize valued at over $5,000, it's going to trigger a withholding requirement. Now with non-cash prizes, you have two options. One option is the winner pays the withholding tax. So now let's say the winner, they win this auto. Well, now they have to pay 24% of the fair market value less the wager. So they have to give the organization 24% of that prize value. And then the organization takes that money and turns around and submits it to the IRS. I know I've had it to where organizations say, well, can't the winner just pay the tax on their personal return? If it is over $5,000, the answer is no. The organization is required to do the withholding. The other option, I've seen some organizations do, instead of having the winner pay the withholding tax, the organization pays the withholding tax on behalf of the winner. So when that happens, now we have this non-cash prize. You take the fair market value less the wager. But now if the organization is going to pay it, it's actually paid at a 32% rate instead of the 24%. And the reason for that is if the organization is going to pay it on behalf of the winner, they basically are going to gross up that prize. So now when they have to go and report the total amount of prize on the W2G, it's going to be the fair market value of the prize less the wager plus the withholding tax. So this should really be, especially if the organization is not going to pay it and it's going to fall on the winner, whatever marketing material that you're using for the raffle should definitely clearly state that the winner of the non-cash prize will have to remit to the organization 24% of the fair market value. So those are the two options when it comes to non-cash prizes that can be used. But I think it's clear that the communication should be upfront on who is going to be responsible for that withholding tax.
So we know the triggers for reporting, we know the triggers for withholding, and just as a reminder, this will be recorded and sent to you. So if you need to go back to gather any of those details again, you know, that was very specific. So that will be provided to you. So we've withheld this 24%, or we're going to, if the organization is withholding at the 32% rate, how do we remit this to the IRS, right? We have it now. What do we do with it? When is it due? How do we figure all of that out?
Right. So yeah, now we have this withholding tax, whether we got it from the winner or we are paying it on behalf of the winner. So the withholding tax, the way it gets paid into the IRS is it has to get paid through the EFTPS system. So that is basically a system where taxes get remitted and paid through the IRS. More commonly, payroll taxes. A lot of employers, organizations have to use EFTPS, and again, to submit the taxes. A lot of nonprofits might not have an EFTPS account set up. So if you know you're going to have one of these raffles and it's going to be over 5,000 and you're going to have a withholding requirement, I recommend getting an EFTPS account set up as soon as possible. And, you know, on the IRS website, there's a link that takes you to EFTPS to get that set up, because you do have to have that set up. They send you a PIN in the mail. So there is kind of a time delay to get that set up. Once that's set up, then you go in there and you make the deposit. So that's kind of step one. Take the money, deposit it within your EFTPS account. Then the next step is you're going to file an annual form, a 945. This is filed annually. It is due January 31st. And what that form is going to say is, you know, we had these winnings. Here was the withholding tax. I withheld $2,000 and we remitted $2,000. So that's really the 945 is required. Even if you've already submitted the tax through EFTPS, you still have to file the 945. And then the other form is the W-2G form. So again, you're going to have this W-2G form that's going to show the gross winnings. And really the amount that goes in gross winnings, again, it's the value of the prize less the wager. And if the organization did pay the withholding tax, it's going to be the value of the prize less the wager plus the withholding. Then there's going to be another box that shows the withholding that was paid. So a W-2G will have to be filed, again, going back to kind of the beginning of the talk on raffles. Even if you meet that requirement of the 600 and the 300 times the wager, you're going to file a W-2G, even if you don't have a withholding requirement. If you have the withholding requirement, both pieces all go on the W-2G. And that has to get submitted by February 28th. And that the W-2G will be given to the winner. They can use that then to prepare their own tax return.
Thank you, Anne. So I think one of the our favorite things is when somebody calls us and says, hey, this is what I'm doing. What do I need to know? So that's something that Anne and Gwyn see and can help with also. You know, just know that you're going to be triggering some requirements and that you can do this yourself. Here's what you need to do, but also that there is help available. So thank you, Anne, for that.
You're welcome.
We'll switch over to kind of a hot new topic here that we've been talking about a lot recently. Gwyn is our in-house cryptocurrency expert. So Gwyn, can you give us a quick overview of what is cryptocurrency and why would our nonprofits want to accept something like this?
Right. So cryptocurrency, I mean, I'm getting a couple news blasts every day about updated changes that's coming for cryptocurrency, but real basically, cryptocurrency is this digital currency in which transactions are verified and recorded, and they're all maintained on this decentralized system rather than using like a centralized bank that's used for our, you know, fiat currency that, you know, the dollar that we have now. You know, everyone kind of knows what Bitcoin is. It was sort of like the first cryptocurrency that was out there. And as that's grown in popularity, you know, other coins have become available to the public. So now you hear like Ethereum. I know Dogecoin's been out there a lot recently, even made a, SNL preview with Elon Musk talking about it and, drove the prices down and upset some people. But, these records of what happens with cryptocurrency are all public. It's stored on the blockchain. It's supposedly going to be this much more secure type form of reporting because everything's verified. It's very hard to manipulate the data once it's on the blockchain. And a lot of younger people have, gotten interested in it, with everyone kind of being home this past year. A lot more people have invested time in learning more about it and, getting various coins and just watching the market grow because, when Bitcoin first started out, you could have 10,000 Bitcoin and it'd be worth nothing. And now, 10,000 Bitcoins worth a couple $100 million. So it's definitely an area where it's growing and there's a lot of value to it. So some benefits of accepting the cryptocurrency for the not-for-profits, again, it's a growing area. Some of the data I was able to find is that, it's currently valued at about $1 trillion. And there's about 100 million users that are operating with different kinds of coins that are out there. It's definitely a new stream that can be opened up to the not-for-profits and getting funds in, with this past year with COVID, maybe people haven't had cash dollars on hand and been able to donate that way. Maybe instead of donating cash, they typically volunteered. And with COVID, a lot of organizations have had to scale back their volunteering and having the public come in to assist. And, a lot of the millennials and Gen Zs are the ones that are involved in cryptocurrency. Typically, about 60% of the users are under age 40. So it's going to open up, a new segment for not-for-profits to get funds in because, you have your older population, some of them really enjoy writing the checks and sending them in at the end of the year. While, the younger people, may not have the cash, may not be able to donate, but happen to get in at Bitcoin at the right time. They want to do some good in the world and want to donate their cryptocurrency and sort of get the tax benefit of making that donation to an organization. Just like when people donate stock to an organization, the donors are still getting a tax deduction on maybe a highly appreciated asset. They don't have to pick up the gain, and they get the benefit that way. So as far as why people want to donate it, it's very similar to why people donate appreciated stock to organizations. And then what else I was able to find is kind of like how popular is cryptocurrency, being donated, what's the volume? And these stats are a little slightly outdated, but as of December of 2020, the Giving Block, which helps facilitate some cryptocurrency donations, they helped organizations get $2.1 million in donations just in that month alone with year-end giving. So, it's definitely an area for growth and, another revenue stream that some organizations can consider when, maybe they've maximized funding, they've done the fundraisers, they're getting what they can, cash donations in from their current donors and, are looking just for another revenue stream out there.
That's great. So it sounds like it's a big opportunity, especially with its significant growth and the step up in basis that I understand that taxpayers would get by donating cryptocurrency that maybe they got early on and it has grown significantly. One of the things that I would really recommend is looking within your organization and deciding if cryptocurrency is something that you even want to accept and what is your policy on that, right? So just like you have any gift acceptance policy, what is your policy on crypto? What types of crypto do you want to accept? Because you kind of have to set up accounts there and have that ready to go. Is there a dollar limit? Are you going to immediately trade it in for cash if you can? So just considering those kinds of things, making a policy and saying like, once you know what it is, do you want to accept it? And so once we decide we do want to accept it, how do we go about that, Gwyn?
Sure. So there's sort of three avenues an organization can go down once they've sort of come together and agreed that this is an avenue they want to pursue in doing. The first method they can use is a third-party exchange, or sort of like a payment processor. And that payment processor will basically receive, hold, and sell the crypto on behalf of the organization. They'll reduce it by, you know, a 1% to 5% fee, depending on the size of the transactions coming in and that sort of stuff. And then they will move the cash over to the organization. They're very similar to like how the credit card processing payments work. You know, they're sort of the middleman between the two users. They reduce it by the fee and they kind of move the funds over. If you're a smaller organization and you want to get into crypto, this is probably the best avenue to pursue, because this third party is going to kind of handle everything for you, versus you trying to handle it in-house, where you're going to need, you know, some staff with expertise and people that kind of know how to handle it. So that's definitely a great option for those trying to get in initially who might not have the staff for it. And then the second avenue would, again, you know, manage it in-house. Obviously, you would have to have people knowledgeable about how cryptocurrency works and the wallets and how you can kind of sell it and all the processes that kind of can go along with that. So those would probably be something a larger organization with more staff and capacity that could probably handle it in-house. And the third avenue is that you can actually use a donor advised fund. So some of the donor advised funds out there will actually accept the cryptocurrency donations. And of course, the sponsor of the donor advised fund, you know, will liquidate the assets and kind of give the proceeds over to the organization. I don't believe there's too many donor advised funds that are doing it. I think maybe Fidelity has one, but don't quote me on that. So that could take a little more research as to which exact donor advised funds can handle that kind of those transactions. The other payment processors that are out there, if you wanted to just kind of outsource it to a third party. So I did mention the Giving Block earlier, and there's also this InGiven that will handle it as well. I'm sure there's other ones out there, but those are sort of the two main ones right now that are out there that organizations can use. And then after the organization gets that donation, you know, what are their requirements that they're going to have to provide, you know, to the donor? So any non-cash donation that's $250 or more is going to require the regular donation receipt that they've been kind of handing out anyways when people are donating any other sort of non-cash item. Because cryptocurrency is not treated as cash, it's treated as property. The donor might have to file an 8283, which is the non-cash charitable contribution sheet, to receive the deduction on their 1040, which basically means that if the contribution is valued at $5,000 or more, the donor must receive a qualified, you know, appraisal that's prepared by, you know, someone who's qualified to appraise the property and substantiate the value. It's unclear right now because there's no one really certified in cryptocurrency that can provide a valuation on it, but it is sort of traded in open market where you could probably safely assume that the market value that on the date of the donation would suffice for the value that the organization is receiving.
Awesome. Thank you, Gwyn. And I do just want to point out, so there are some new rules coming down the pipeline on your financial reporting for non-cash donations. So we'll be sending out a newsletter on that soon as far as what will be required, but just keeping that in mind that not only if you decide to accept this and how you accept it, but the reporting requirements might become more significant in identifying your non-cash donations and kind of describing those if you are issuing financial statements. And that is already considered on the 990 also. So just things to keep in mind as you're going through. Kind of on to our final topic here. We're down to our final minutes. Just talking about our 990. So I think we have a lot of opportunity here. We talk about how it's public. And so who's looking at our 990, Gwyn? When we're thinking about this, who would be looking at it?
Right. So 990s are public. So really anybody who's interested in your organization can go to the IRS website, can go to a GuideStar, can go to a charity navigator, basically type your name and pull it up and look at it. So, you know, you could have grantors, possible donors, new employees, board members. If you're in the realm of maybe getting a loan or something, creditors and banks can all go and kind of look at it and kind of see what you've been up to and how you've been reporting certain things. Let's see. So the most important thing you want to remember is with the 990 being public, you know, what are going to be, you know, your keys to success in using the 990 as a marketing tool. Not all non-for-profits have a financial statement that they can use. A lot of the clients in our realm here at CK, you know, most of them are tax only. So all they have is this 990 to kind of talk about themselves and use it in grant writing and that kind of stuff. So your mission statement is reported on page 1 of the 990, and this should be kind of short, to the point, state what the organization does and for whom do you perform this service to. And you also should make sure that the mission statement that's listed on maybe your website or various marketing materials, you know, matches what's on the 990. You know, sometimes these things change through the years, or as your mission maybe changes slightly, or you want to make a change to the wording. You know, it's important to make sure that everything is kind of matching up on wherever you're placing your mission statement. Other key areas that people are looking at is your program service accomplishments. So this area on the 990 is listed out by your 3 largest programs, and they're listed out by the larger the expense, kind of they go in order of 1, 2, 3. This is the section you can really use to brag about your organization. You should be updating it annually for new data. And, you know, have your marketing team, you know, get involved. I know we use Mary here on a lot of our stuff because, you know, she's really good with words and, you know, making it sound a little more fun than maybe it really is. So definitely get marketing involved when it comes to this area. You know, make sure you're working, if you have an outside CPA who's preparing your 990 for you. You know, typically we use the same information every year, prepare a draft, send it back to, you know, the board to review during, you know, one of their meetings. You know, make sure these are areas that you're looking at to see if maybe we should change the wording. An example of a well-written program service accomplishment. So I pulled this from Feeding America. So during their fiscal year 2017, the National Produce Program distributed 107 million pounds of fresh produce to our member food banks. Additionally, Feeding America regional sourcing personnel generated 62 million pounds of produce for the network. In total, the Feeding America network distributed more than 4.9 billion pounds of food and grocery items, and this represents a greater than 4% growth over fiscal year 2016. So in here, they're talking about measurable results that they had from year to year. You know, they're growing, they were able to get out more to their member networks. So like those are key points that you should bring up, you know, in your service program instead of, you know, keeping it very vanilla. This is where you can kind of add some spice and some flair, you know, and really brag about what the organization has done, especially this past year in 2020, where so many organizations were facing so many different hurdles. You know, this is an area where you can kind of shine to show, you know, even during the pandemic, you were still able to, you know, meet your users' goals, and this is the services you provided, and big wins in those areas, which is going to be huge. Another area that a lot of people, sorry, go for it.
So sorry. No, just want to say one thing that I love about what they wrote there, and it goes for your grant writing as well, is they really put context to the numbers. So they didn't just, you know, repeat out a bunch of numbers, but in a statement of needs, in a grant proposal, also in this kind of marketing language, to put context to it, to say that, and that represents an X percentage over last year, really demonstrates a growing need, that kind of thing. That's how to really kind of turn that language up a little bit.
Right.
It sounds like this might be a really good time or opportunity to think about our mission statement, see if it still defines and aligns us well with what we're trying to do, and also really think about those program service accomplishments and see if that aligns us also with where we're trying to head in the future.
Yeah, definitely. And I know Ann and I, as we've kind of worked through our clients' 990s, and we've kind of seen it's the same thing we've been saying kind of like year after year for the program service accomplishments. We've been reaching out to them like, hey, this past year, is this what you're still doing? Can you add some context to this? Can you add some numbers? Can you add some data where we can kind of brag about this, in this area? Because we've had some organizations that have been able to succeed on maybe their program service revenue, and due to COVID, they haven't been able to perform, those services because they couldn't do in-person events and things like that. So, it's a good area to kind of get creative in for sure. Another area that a lot of people are looking at. So on the 990, there's a whole section of like policies and disclosures that, we should probably really make sure are accurate. So there's a whole conflict of interest policy. People want to make sure you have that. There's a whistleblower policy. Are you tracking board minutes? Are they being recorded? Oftentimes us as your CPA, like we don't always know the answers to these. So, this is an area that you should look over once you get the draft back from your accountant to make sure, like, yes, we still have these policies in place. Maybe if you didn't have one, you've added it over the year and we can update it that way. I know when your 990 is searched through the Charity Navigator, you can get points kind of added or deducted in this area if not all of the recommended policies and procedures are kind of answered yes. As far as the IRS perspective goes, like this is just sort of like a best practice. You're not more likely to generate an audit if you don't have a conflict of interest policy, but your donors might want to see that, your employees might want to see that kind of stuff. Another area that really needs to be considered is the statement of functional expenses. So on this page of the 990, it's going to break out your expenses between what are program, what are sort of your general and administrative, and then what are you allocating to fundraising? A lot of organizations might just dump everything under program, or they might not be sure of like what the difference between a program and a general administrative expenses. So it's key to make sure you're allocating expenses appropriately. So if you have someone that's solely working on program, it should go there. If you have more of the general administration of the organization, obviously it should be a general expense. Donors like to see how much of every dollar is going back into programs. And if you have expenses on here that might be a little questionable without context, you can use that Schedule O, which will elaborate, maybe employee benefits look strange just on the surface, or, maybe there's some other random expense that's on the bottom that needs a little more explanation to go with it. You can definitely use Schedule O to elaborate why that expense is what it is, just to ease over like donors if they might have questions on it, or you feel, it needs a little more to it.
Thank you, Gwyn. It sounds like the key takeaway there is really just to kind of look through our Form 990, maybe talk to our CPAs, make sure we're telling the story that we intend to tell to the public, and make sure that our numbers are also telling the same story that our narrative is. So that's great. So I want to we have just a few minutes left, and I want to leave a minute for questions if we have any. But I did want to mention, if you're not already receiving our monthly newsletter, just sharing information, education once a month. So email info@corrigankrause.com if you would like to sign up. And at this point, I'll pass it over to Mary if there are any questions.
Yep, we definitely have a couple. First, we're going to circle back to Ann. Does gaming or gambling fall under the same rules as raffles?
So gaming and gambling, it is comparative rules. There are different thresholds depending on what type of gambling that you're doing. So if it's just an instance, if it's bingo, the winnings that have to be reported, instead of the $600 threshold, it's $1,200. And as far as withholding, I'll just say bingo doesn't have the withholding requirement. So, so there are some different, when you're getting more into the gaming and the gambling, there are some different thresholds, but there are still going to be some reporting requirements there as well.
So it sounds like it's good practice to circle back with your CPA before you start hosting your annual bingo event.
Definitely, yes.
Right. To Lauren, if your group is having a low yes rate, like you gave us that 75% yes rate that you want, do you take that as like, yes, we should definitely move away from grants, or is there a change? What else can you do? Because if you still feel like there's money on the table grant-wise for us, but we're not getting them, how do you take a step back and develop a new path for yourself?
I think that that's something that, the answer is it depends because there's so many different factors. But I think one thing that I would recommend if you're getting a very low rate is to go to all of those funders who've said no, and I mean all of them, and try to get them to talk to you about why. What is missing? What would make this more compelling? What are you giving in this space? If not to us, then what are you doing? I would really try to use it as an opportunity to do two things. Learn for yourself, give them fewer and fewer reasons to say no in the future as you learn and adapt. And then two, get to know them better and actually learn, hey, you know what? Maybe we're barking up the wrong tree. Maybe this is always going to be a no from this funder for these reasons. So we're just going to save ourselves that time, and we're going to look for a different funder to try to build a relationship with and get a granting relationship going. So I think use the no's as an opportunity every single time to learn something.
So do you find that funders are relatively available to have those types of conversations, or is it really, it's dependent on the funder, but it's always good to ask?
Sometimes yes, sometimes no. And sometimes they won't be very forthcoming with you. Sometimes you will hear, oh, it was just so much competition, which might be the truth, but there usually is more to it than that. So I think but you can always ask, and you will hear likely back from some. And so that's going to be good info for you.
Got it. All right. Last question we had to Gwen. You talked a little bit about thank you letters for cryptocurrency. Do you have any guidance on what the thank you letters should state? Is it different than your standard thank you note that taxpayers can use, on their end for their 1040s, or is there something extra that might need to go into a cryptocurrency, since those valuations change so much just day to day?
Right. So I think organizations can kind of stick with sort of that boilerplate template that they might be using. If you're going to stay under, the under 250, it's a typical, thank you for your cryptocurrency donation on, 12/12. Here was the value as we received it. Once you start getting into high dollar ones, we'll have to make sure that appraisal shows up somewhere along the line, whether the donee has it or knows somebody that can prepare it, but it's not too much extra work, when someone donates a car that's highly valued or something like that.
Okay. So most groups are going to have the appropriate boilerplate letter. Just include that date so that no matter what, you can always look back and see what it was worth then. Great. Right. Well, in the final minutes of our presentation, I want to sincerely thank the four of you. We have Lauren and Gwen, and oh, wait, somebody got in just under the wire. Lauren wanted to share her information. If you have any questions grant related, Lauren is such a great resource. Her email is lauren.steiner@grantsplus.com. Her phone number is 216-916-7376 extension 1. And since this is recorded, you can always have me repeat that as many times as you want. But we'll include all of their contact information in our follow-up email. So having that is very important. And also, Lauren is on LinkedIn, as are Gwen, Ann, and Kaitlin. So you can connect with them on LinkedIn. From the Corrigan Krause side, go to our website. You can connect with Gwen, Kaitlin, and Ann, and we can certainly reach out to Lauren if you want to speak with her as well. So as Kaitlin mentioned, please join our wonderful newsletter. We will not spam you. We have great information every month that we send out. And we also have another webinar that is scheduled for October 26th, planning for 2022, which is very hard to believe that it is time to start planning for 2022. It is August, in case anyone needed a reminder, but what nonprofits can do today so that they can grow tomorrow. Visit us on LinkedIn, visit us on Facebook, connect with us any way you'd like, but that is all we have for today. So thank you everyone for joining, and we look forward to seeing you all October 26th. Thank you, everyone.
Thank you.
Thank you so much.
Thank you.
Thank you.